we are back on the first keynote session. That's emerging crypto landscape, all about crypto banks, crypto ETPs, ETFs, DeFi exchanges. This keynote is shared by two of them. Mr. David Carr, he is a co-founder TAP Global from Gibraltar. TAP provides an alternative banking product for both crypto assets and as well more traditional fiat currencies. And Mr. David is involved with programs in 65 reloadable scheme branded programs, including general purpose reloadable money transfer cards, corporate incentive cards, expense cards, travel currency cards, payroll cards, and numerous closed loop gift cards. And we have Travin, Keith, he is co-founder Immunefi, he is from Switzerland. Travin is a co-founder Immunefi, the premier bug bounty platform focused on blockchain, smart contract security. In addition to Immunefi, he spends his time as an advisor, co-founder, stalker, an STO platform in Ethereum, and the Liquid network by Blockstream. Regular public speaker at crypto, blockchain, open science events. He is also an advisor of projects and companies such as Sorabsu, Obyte, Rectic, and Blockchain Jew. And we have another speaker, Dr. Mattia. I think he has got login problems. He may be joining anytime. So if he comes, he can join. So over to you, David.
Great. Okay. Thank you, everybody, for joining us today. I only have I've got, can you see my screen? No.
Yep.
Oh, you can. Okay, great. So I wanted to touch on today, it's primarily focused around the crypto banking side. As KN alluded to, TAP is for want of a better word, a crypto bank. So we hold multiple digital assets within the infrastructure. We also add in GBP, Euro, and USD wallets. The Euro and GBP wallets are actually backed by physical bank accounts for the users. So we offer all of our users within the EEA either a UK GBP sort code and account number or a European Euro IBAN, depending on where they live and what they need. You can have both. Obviously, we don't restrict you, but obviously, depending on the country you're in, you may not have access to one or the other, so it's a bit pointless. We do offer US dollar wallets, but we don't hold US dollars physically due to local regulations within the US. Obviously, getting a US dollar bank account to then share with our users is a bit more difficult. Every account that we offer is a named account. So when you deposit to TAP, a user deposits to TAP, they're not sending any money to TAP. They're sending money from, so if it was me, I was sending from David Carr's bank account in the UK to David Carr's bank account with TAP. So it's a named account, so there is no transactions, no funds held by TAP directly. All funds are protected in an e-money segregated account. So we believe that we're almost a new definition of a crypto bank, offering everything in one format, which is easily controlled by the users, so that they can move money in and out of crypto. They can go in and out of different virtual assets, convert into Euro, to GBP, to US dollars, do what they want to do with each of the currencies. The definition of crypto bank has changed, I think, over the last 2 years. Crypto banks, when they were launching and talking about it 2 years ago, it was all about the virtual currencies, and fiat was always a third-party piece. Now we're trying, obviously everyone's now coming into the integrated side. So having everything in one place obviously makes it a lot easier for the consumer. And TAP has built this. Now, my co-founder came to me 3.5 years ago with the idea. So I'm not the crypto expert at all. I had very little to do with any Bitcoin or any other cryptocurrencies prior to 3.5 years ago. My background is banking. So my co-founder is a crypto guy. So between us, I've taken his ideas and made it into a workable banking-friendly solution. To be a crypto bank, you need to be regulated. That's my opinion. Obviously, there are people out there offering crypto banking solutions that are not regulated. I don't believe that's going to be the case for very, very much longer. I think everybody should be regulated in one form or another. I took the decision when building TAP to go down the regulated route from the start. It delayed my launch by probably a year. However, it's given me a lot more comfort now with my partners. I was the first MasterCard approved crypto product in Europe. Without the regulation behind me, I would never have got that relationship. The bank account facilities that I now offer to my users, I would never have had that if I wasn't regulated. We chose Gibraltar for our regulation, primarily because they were an early adopter in publishing a framework and giving people the opportunity to actually work with the regulator to define the product, make sure that it's all above board. The license is very difficult to get. There's 14 license holders currently in Gibraltar. I've got e-money licenses in 6 to 7 months from the start. This license took me closer to 22 months to get, primarily because it's a new license and nobody wants to give away a license and then find that the person you've given it to is not following the rules. Licensing is primarily around, as Kayen alluded to, AML controls, treating customers fairly, all of the things that you would expect with a regulated entity. So in my view, a crypto bank needs to have both the regulatory risk appetite, follow the rules, and be able to adapt fairly quickly. The market adapts quicker than we can code some of the time. So some of the new rules around sharing data. We collect full KYC on every user. So us sharing that data is not really the big concern. Sharing the data in the correct format for the recipient or for the regulator that wants to review it is where it becomes a little bit trickier. Following the standards, if everybody follows the standards in terms of first name, last name, dates of birth in a similar process. So you have the US way of portraying a date of birth or a date, the European way of doing it, obviously different parts of the world doing it in different ways. If we're all following the same construct, then it's a lot easier for us all to share the data. I would prefer to have a name associated with every wallet. So it's not how the blockchain works, but in an ideal world, if I knew that I was sending it from my crypto wallet to Travin's crypto wallet, and I could identify it as Travin's crypto wallet using the blockchain or having an intermediary to tell me that it's Travin I'm sending it to, there'll be a lot less fraud. We're up for working with the regulators across the world. The Gibraltar license gives us the ability to buy, sell, transfer, exchange, and hold digital assets. Our digital assets are stored in a BitGo cold storage facility, which is as secure as we can get. Obviously, BitGo obviously believe it's fairly secure because they gave us a $100 million insurance policy that it won't be hacked. So they're fairly confident. So we're fairly confident. But we always store our users' assets in the cold storage at the end of every day. So it's never, the consumer's assets are never at risk. Again, this is one of the mandates of being a true crypto bank. Not putting the consumer at risk is a key part of being regulated. The way that I believe the crypto banking world is going is that we will continue to see more and more people become regulated. The UK government has obviously started a process. It's nothing like being regulated. It's almost a database today. but they do believe that they will go down that route, which is great for me because people are following in the footsteps of TAP, and if they have to be regulated like I do, it will slow people down in terms of doing dodgy things and giving us a bad name. So the crypto world still doesn't have the best name out there. And if people are doing things that aren't protecting the consumer, I believe that will continue to be a problem. So crypto banking is here to stay. I can't see it going anywhere. We're working together as a community to obviously build better and better functions. Things that KN mentioned, stable coins. So we're looking at adding stable coins into the TAP ecosystem. We're looking to add in more of the top 50, top 100 tokens into TAP. We don't want to be overly saturated. We're not an exchange, so we don't want to be overly saturated with tokens that we're promoting for people who are just out there to raise some money and disappear. That's not our business. We want to have tokens that are going to be around, have some longevity. Of course, we can't guarantee that with any token we onboard, but our idea is trying to be a little bit choosy about the tokens that we allow people to buy within TAP. Just to give a little bit of background on TAP, we are a multi-exchange platform. So you onboard with TAP, we're connected into Binance, into Bittrex, into Huobi, into Kraken. So when you onboard with TAP, you don't need to be an expert. You just need to tell me what you want to do. What pair do you want? Do you want to buy Bitcoin with US dollars? Do you want to buy Ethereum with euros? Do you want to buy the Huobi token with Bitcoin? All of these different pairs are out there, and we will work on our middleware to get the best price. So we'll go out to all of our exchange partners, find the best price for the matching pair that you're looking for, therefore present it back in a very seamless way to you, saying, yep, okay, you can have this much Bitcoin for your US dollars, this much Ethereum for your euros, and give you the option to say, yes, confirm that I want it. So you need to confirm within a certain amount of time, obviously the way the markets change, but if you press yes, the transaction happens in real time as far as you're concerned. Because we all know in the crypto world, those transactions don't happen in real time at the same time as we're doing it. The way that we facilitate that is we're using our own liquidity within the exchanges that we're partnered with to settle those transactions in your wallet now. So you buy Bitcoin with us, it's in your Bitcoin wallet. As soon as the screen refreshes, it's in your wallet. So a little bit different to some of the direct exchange connections, which you can go out and get. Obviously, people can go out and get a direct connection with Kraken themselves. But with the way that we work it is that the funds are available immediately. We'll deduct any fiat from your wallet and convert it into the asset that you've chosen, and vice versa. And then you're free to choose to do what you want with those assets. If we like the users, we prefer the users to leave it in their cold storage because we know it's insecure. However, we don't restrict you. See, we're not the police. If you want to transfer it to a private wallet, then that's completely up to you. If you want to transfer it to another provider, that's completely up to you. We don't restrict the movement of any of those assets in crypto or fiat. It's completely up to you. The beauty of the MasterCard is that obviously if you want to get access for a couple $100 euros or a couple $100 worth of transaction, you can use your card to go and spend that money. So we are working on a number of things at the moment in conjunction with MasterCard to make the Bitcoin, the Ethereum, whatever token it may be. Not every token, obviously MasterCard will be a bit restrictive, but so most of the major tokens will be available, and we can convert those at the time of a transaction. So you don't need to hold any fiat. You can just hold Bitcoin with us. And today that's not available, but that's what we're working on at the moment is the facility so you can go and buy your cup of coffee with a fraction of a Bitcoin or a fraction of an Ethereum or whatever other currency you might hold within TAP. That facility is phase one. We'll convert it into fiat and pay the merchant in fiat. However, it is coming. I'm talking with MasterCard all the time. At some stage over the next 6 to 8 months, we will have the facility to actually settle those transactions to the merchant in the same currency, so in Bitcoin, if they want to take it. So it will be up to the merchants. We do have a merchant gateway offer already. So if you're an online merchant, you can accept Bitcoin, Ethereum, and other currencies directly into your checkout, and we'll give you a tap wallet for doing that. So you can collect it there, and then if you want to convert it in real time into fiat, you can do that. If you want to store it and see what the market does, you can do that too. So all of these facilities, and as a crypto bank, I think you need to adapt. You need to add more and more functionalities to be more like the traditional banks, what the traditional banks thought they were. Okay, one of those is obviously interest. So we're looking at the interest-bearing facilities, and we'll be using stable coins for that function. So a tethered USD, true GBP, true Euro. We will offer those as a tethered facility. See, our license is purely crypto. We partner with the banking elements. So we provide the bank account as TAP, but we're not the provider. We're not a licensed bank ourselves. So we partner with licensed banks to provide that service. What TAP does is brings it all into one ecosystem so that you can see everything in one place. So that's what I believe about a crypto bank is. So you've probably heard enough of my dulcet tones. So I will hand off to Travin to talk about the next section. I'll be around to answer questions as we go through.
Yeah, thank you very much. It was very interesting to hear more about TAP. Just so the entire audience knows, I wasn't asked to say this or anything, but I'm actually a big fan of TAP and what they're doing. As somebody who's been making his income in cryptocurrency for most of the past 5 years, seeing something like this is very encouraging because I think it's the way forward. I mean, what I currently do about having to transfer over and convert so many times and going through a lot of hoops can be quite frustrating. So David's colleague Arsen is somebody that I know actually as well, and I've been watching them since they launched, and very happy to see where they're going. So thank you, David, for sharing as well. I'll try to share my screen now. Is it up? Hello?
Yeah, I can see the whole screen, but I can't see the actual. Oh, there we go. Yeah, I can see that now.
Okay, perfect. So, you're ready? So, hi, I'm Travin Keith. Sorry. I am the co-founder and COO of Immunefi. We're a bug bounty platform focused on crypto and smart contracts to prevent catastrophic hacks around the space so that projects don't get on the news for being hacked, but instead rather get on the news because a critical bug got disclosed and nobody lost their money and somebody got rewarded. And that's actually what happened a few weeks ago when this protocol called Armor, they got on CoinDesk because a critical vulnerability was disclosed instead. Bug bounty hunter got paid $700,000. Everyone was happy. And so, yeah, it's our goal to prevent more news about people losing millions and millions of dollars. As mentioned also, I was a co-founder of Stoker. It's an STO platform, an advisor for Soromitsu. They work with a lot of different blockchain solutions, including some stuff on top of Polkadot, like PolkaSwap, and Hyperledger Iroha. I'm also an advisor for Obyte. It's a directed acyclic graph network, so it's different than blockchain, but still distributed ledger. Advisor to Rictig. They use the Bitcoin blockchain for product authentication and document authentication. And of course, also with Blockchain Zoo. They're a blockchain consulting company, also coming out with their own blockchain called Zoo BC. So my presentation is, what is DeFi? Well, essentially, it's decentralized finance. Can be quite a lot of things. And the best way, I think, in order for me to really explain what decentralized finance is giving it a short history. A lot of people will probably start off by talking about Ethereum, maybe say like, oh, it came about a few years ago. But actually, it started much, much earlier. I mean, the foundations around what DeFi is really from the initial aspect of peer-to-peer electronic cash, which is what Bitcoin was able to provide. And unfortunately, they did not have the right licenses, so they did get shut down a number of years ago. But it showed the appetite in the space in order to expand from just having electronic peer-to-peer digital cash. And yeah, in 2013, this project called Mastercoin, which is now known as Omni, that's where Tether originated from, started out and had the first ICO really in the middle of 2013. Their intention was to create this layer on top of Bitcoin where tokens could be created, essentially a digital twin on the Bitcoin blockchain, corresponding to something that's in the physical world, like a stock, a financial instrument, or something that's newly entirely created on the network itself. Later that same year, the second ICO called and trade them and have this exchange on there. I mean, right when NXT was starting out, the founder actually had a very interesting quote in November 2013, which I will read to you right now. I want to run a business. I issue an asset, let's call it Krusty Krab tokens, KKT. I set a quantity of KKT to 1,000. I announce that I sell KKT for 20 NXT each and pay 5 NXT monthly interest within the next 6 months. I create an ask order, 1,000 KKT for 20,000 NXT. You create a transaction that sends me 500 NXT for 25 KKT. It's up to you what you do with your 25 KKT. You can place an ask order and sell them for a higher amount, or you can transfer them to another user. But each month, I will check the blockchain to see who owns KKT, and I will send 5 NXT for each KKT who owns them. So it was really, starting out already quite a lot here in terms of having shares, profit participation rights on the blockchain. But there were a lot of problems that are coming on with that. I mean, we had a lot of announcements on the NXT forum back in the day from anonymous users, some people who couldn't really, prove that they would deliver on their promised returns. Some, of course, the tokens didn't really mean anything. It was sort of like a pre-sale, like, oh, if you buy a certain amount of tokens now, you get membership into my platform that I will create in the future. Some people use it for a restaurant fundraising, where if you bought a certain amount of tokens, you would have a 1-year membership where you would have 20% off towards the restaurant and things like that. But a lot of these amounts were very low. I think the largest one at the time was actually this web development and web marketing company in the Netherlands, and they raised around $10,000, and that was large enough back in the day to actually get on CoinDesk. And there were, of course, a lot of legal discussions around it, and they had to stop it. But still, it's like the appetite was there. There were also other projects, of course, like Counterparty, also on the Bitcoin blockchain, and this other project called BitShares, previously known as ProtoShares. But a lot of these names probably aren't familiar to most of the people watching right now, even for those maybe who have been very familiar with the crypto space. And that's because these platforms simply had a lack of users. And there were a lot of problems with these things. It was slow. You had to wait for a confirmation in order for it to be included on chain. There were scalability problems. If ever there were a lot of transactions, you would have to wait to be included in the next block. Maybe there are many people trying to go for the exact same sell order when they're trying to do a market order, and it's just not being able to adjust to that demand. There were also numerous user interface issues. I mean, like what I showed you with the NXT Asset Exchange, that's actually one of the newer iterations of the Asset Exchange. Back in the day, it was very hard to navigate through. And of course, you also had usually needed to download something, which a lot of people weren't willing to do. So the NXT screenshot that I showed you earlier, that's from the NXT client, which one had to download, have to do a lot of things manually, which a lot of people don't really want. They just have their tokens and they want to trade them. And of course, all of this led to a lack of liquidity, and that created a chicken and egg problem. People didn't want to go on decentralized exchanges, exchanges essentially running on the blockchain, and they wouldn't want to continue going on there because there's no liquidity, and no liquidity would form because nobody was going on there. So there were these things called automated market makers already popping up somewhere around 2017 that tried to make things as liquid as centralized exchanges. It didn't go too well. The projects sometimes themselves needed to fund these market makers. They didn't always come out with a win. And at the end of the day, I mean, the volume still wasn't there. Actually, on sites like CoinMarketCap that aggregate a lot of the cryptocurrency market data, the NXT, the centralized exchange, was actually on there as they were trying to push it, but eventually they removed it around 2016 because the volume was really low. I think it was just a few $1,000s per day, which was really dwarfed by all of the larger exchanges like Kraken and all of those. So it wasn't really until this concept of liquidity pools came on, where instead of the project or a company funding the market makers, it would be the users putting money into it. And as an incentive for them doing that, they would get to take a percentage of the potential earnings. I mean, starting out, there wasn't really a lot of potential earnings. Because, well, there weren't a lot of people using it, but the word really spread around, hey, this is a way for you to put money in and get money out. So that then kind of kickstarted the end of the chicken and egg problem, because now there were actually people putting it in and using it, even if they weren't necessarily trading it. But then now also when people wanted to trade, there were these liquidity pools that allowed for greater liquidity in these decentralized exchanges. And so really that's the difference between centralized finance and decentralized finance. It lies in the liquidity pool. Whether the liquidity pool is sourced from a single entity or even a small group of entities, or open to everybody else to put money in and share in the reward. And so Uniswap was really the one that kicked things off, and they had a lot of users, and it's just been growing quite a lot since then. There's been a lot of projects that have been popping up, not just on Ethereum. So of course, there's a lot of different food-related names like Sushi Swap on Ethereum, and there's so many that this exchange called 1inch Exchange, which aggregates all of them, can actually exist because there's so many of them. And of course, on the other platforms, so on Obyte, there's OSwap. On this RSK sidechain, there's RSK sidechain to the Bitcoin network. There's the Sovereign and RSK Swap, and soon in Polkadot, there'll be this thing called PolkaSwap. And we're seeing DeFi expand much further beyond these exchanges. Algorithmic stablecoins, those came on actually quite a lot earlier as well. MakerDAO was one of the ones that came up. Aave was another one. I remember actually meeting Aave back in 2017, and back then they were still quite small. But I had my reservations, but I'm very happy to see these things come around, because it allows essentially people to get fiat currencies without necessarily having to get into that. Not necessarily having to get it. Perhaps if they have some restrictions with regards to the country that they're in or otherwise. Decentralized insurance is something that's popping up quite a lot, as well as ArmorFi, what I mentioned earlier. They also have decentralized insurance, Nexus Mutual, among many, many others that are popping up today. And we're only going to see more of that. And of course, decentralized gambling. One of the biggest projects, back in 2017, 2018 was this platform called Augur. And they didn't really get a lot of users, unfortunately, because though it was a decentralized platform where people could bet against each other, there weren't a lot of users. And because there weren't a lot of users, there was no one coming in there. And so it had the same problems as decentralized exchanges. And so it's something that I expect to see happen moving forward. We still have the problem, of course, of things being a little bit slower. And now we have the problem of things becoming more expensive. But I'm very hopeful around the space. And I mean, a lot of my reservations and concerns have been addressed, and I can only imagine that more of them will just continue to be addressed, and the product will just be polished more as things move forward. So that's all I have to say for around DeFi. Again, I'm Travin Keith. Please feel free to reach out to me if you have any questions. I unfortunately have to run shortly after this. And if you have a project that's interested in getting more secure, please feel free to reach out to me on my Immunefi email as well. So thank you very much. And I'll hand it over now back to Rajan.
Any questions? And if you want to have any questions, anything in the chat visible, not visible, I guess, right? So we go for the next session. Thank you, Travin. Thank you, David, for giving a good insight on the banking, stable coins, NFTs, and DeFi. Thank you very much. Thank you.
Thank you as well.